Hello, everyone. Peter said hello. Hello, Peter. How are you doing? We just sent the link out, guys, so we are waiting for everyone to get connected. So good evening to those they join us now. Guys, where are you watching us from? Come on. Peter said, doing great. Thanks. Excited. Focusing session. Absolutely. Peter is calling from Sweden. Fantastic. Who else? Where are you guys watching us from? Welcome to another weekly market watch, key insights and predictions here at Elevating Forex. So Jack from Mexico or Mexico. Swayam from India. Great. What time is it in India now, Swayam? I'm very curious. What's the time there? Who else? Where are our friends from the UK, from Bulgaria, from all the rest? Hi, greetings from Macedonia. I'm new but excited to learn. Oh, fantastic. And I see your name as just A, so I will address you as A. So there it's 11 p.m. Okay, thanks for joining us. Anissa from Portugal. Fantastic. And of course, to everyone else that is on this webinar. Guys, I'm just waiting for a few more seconds because I see just people are still joining. Anisio said, nice to be here. Nice to have you here too. Anton, hello from Finland. So far we have Sweden, Finland. I'm waiting to read someone from Norway. Yeah. Karel from Czech Republic. Hello, Zdravim. That's what I can read. That's how I can read. Nice. So, guys, I think we are ready to start. And just before we go to the charts, one more time, officially, I would like to welcome you to this Sunday webinar. We're going to go through all the markets, and there are extremely important events that are happening this week. Ricardo from Switzerland. Guys, if you have any questions or any comments, please make sure you put them on the chat, and I will read them and I will answer them as fast as soon as possible. So the disclaimer states that this content is for general information only and is not intended to provide trading or investment advice or any personal recommendations. For those that don't know who I am, my name is Theo here at Elevating Forex. My experience is about 12 years experience in trading. I specialize in currency trading. That I have to change this one, like so also indices and commodities, because the correlations are very tight there as well. As for my expertise, I'm a certified financial technical analyst and a certified market technician by a few different worldwide or recognized associations. On a daily basis, beside the trading activity, I conduct market analysis for hedge funds, for trading firms, for prop firms. I create courses for trading and investing. And you're going to ask me, Theo, where is your course? And it's still coming. I publish articles in reputable financial magazines, and many people in the industry, they know me by hosting webinars with Steve Nilsson, with John Bollinger, and many, many other more. Hello from Guatemala. Great. So, guys, let's start with the euro US dollar, and this actually it's been a couple of weeks, guys, that the euro US dollar and the majors actually, except the USD Japanese yen, are pretty much trading sideways. They stop these nice downtrends we were used to see here. Okay, so we used to see some kind of downtrends here. Next week, previous week, the market didn't go anywhere. What we see is on the 4-hour chart, we could draw this downward trend line and this horizontal trend line. This is a chart pattern in trading called descending triangle, and it has bearish implementation. So we find it in a downtrend, and once we identified it, it indicates that the price is just experiencing downward pressure, selling pressure, equals lows here, and it's expected to break to the downside. But sometimes, guys, after, and ladies and gentlemen, after a downtrend, like after a mature downtrend, the descending triangle has bullish implementations. That's a rare case, but also keep that in mind. So don't be surprised that next week you're going to see a bounce of this 1.066, and the price is going to find the support, and it's going to move upward, and it's going to take over and come all the way here. Okay, now why I point this area, mark it on your chart. It's an area that hasn't been filled yet by the price. It aligns with the fair value price trading, and actually now okay, the fair value price trading, I'm not going to go into this detail because we're going to stay here for too much time, but I will try to address it in a very short explanation. The price in primarily in forex markets, okay, once it goes directionally in the one side, and like this, it just sells off, it has the tendency 95% of the times at some point in time, we don't know exactly when, but to move upwards and kind of regain all these what we call unfilled areas. And that's why I call it fair value price. Some people there on ICT content, they call it fair value, and that's where they call it fair value gap. But the gap in the market is this one here. So that's not a fair value gap. That's a fair value price. Okay, that's not a gap. The gap is this one here. And on my analysis, if it happens and you read my analysis on some websites out there, you will read the same thing. It's fair value price, this one. So next week on Friday, guys, non-farm payrolls. For those who are new here, non-farm payrolls, it's one of the events in the forex market that has extreme amount of interest by traders as well as volatility. Now, the consensus estimates that the non-farm payrolls, they will drop this month. So the report, it's going to be negative. So this can, if this is going to happen, and if the market will follow through, then the US dollar, the USD, can experience a downfall. So if that's going to happen, the euro USD, it's going to move upwards. If the US dollar is going to move down, it means the euro, it can lift it up. That's why sometimes we're going to just see the price moving sideways before the event. Let's say tomorrow is Monday, Monday, Tuesday, Wednesday, Thursday, maybe the price is going to just move sideways until Friday. The non-farm payrolls, it's going to show the direction that we're going to trade the week after as well. Okay, now something else. On Wednesday night, the FOMC minutes. Again, very, very important event. It happens during the New York trading session, during the close of the New York trading session. It's going to spike the market. The volatility, it's going to be crazy, especially moving towards to the US elections now. Someone says cannot hear, but everybody here sound it's okay, I think. Is sound okay for everyone? Yeah. Guys, confirm if you can hear me and I don't speak to myself. Yes, okay, sound is good. Okay, thank you so much. So I think enough for the events. So you guys understand that the major currency pairs, the reason they behave like this, they behaved like this last week, and we expect them to behave similarly until Friday, is because of these important events they will happen this week. In terms of the sterling against the US dollar, on Thursday, we will have the parliamentary elections in the UK. So you imagine how crazy the volatility it's going to be on these currency pairs and in general on the Great British Pound. So far, the price is trading with this descending triangle on the USD, on the Great British Pound US dollar. If the price will find support here and create a bullish reversal price action like bullish engulfing, BE, or a bullish hammer, BH, we can take some shots to the upside and we can target this downward trend line area. Okay, but even better, if the price is going to continue moving downwards and it's going to come at some point to test this trend line and it's going to find resistance with a shooting star or a reversal pattern, then we're going to be good to go short from there. Now, currently, the price is in the middle of no man's land. I understand that when we do webinars, because I do this job for many years now, traders, they get a bit frustrated at the time of the webinar because they are trying to see on Monday at 10 a.m., let's say local time, it's a London trading session and I want to take a trade. So what should I do here? And sometimes, guys, we have to wait for the price action to develop while the market is running. And after to take the trade, right now, we are making the assumption of how we can trade next week. Okay, is that clear to everyone? And I want you to feel comfortable with that because that's what trading is about. Right now, the price is in the middle of this downward trend line and this static support. So we cannot say, okay, let's take a buy trade. Why? We want the price to be at resistance to short, it means to sell, or we want the price to be at support to buy. Okay. So that's the plan on the Great British Pound US dollar. Next one, Australian dollar US dollar. We had some nice, at least I had some nice trading setup here, like everyone else. We are all watching the same chart. Based on the trading plan I do every Sunday for you guys here, it was the only tradable opportunity, this one there. The previous week's high that we marked it and it was there for you. The price, you see the price traded up. Let's zoom in a little bit. You see that the price came up with this bullish Marubozu candle and it failed to penetrate the resistance and it created this false breakout. So a false breakout lead to a trade on the opposite direction, especially when the market is ranging. It's not a counter trend trade, this one. It's not a trade against the trend. This is a trade from a resistance area. Here it's a resistance area, okay? And that was the support. So from resistance to support, it was actually a worth trading and a high probability trade setup, this one, okay? Now, the price currently is at this, it's at the same resistance actually, but this is an inside candle and it's not a strong reversal price action pattern. The strong reversals price action patterns when we are selling are two. The first is this shooting star here with a long upper wick and a small relative body. And the second one is the bearish engulfing like this one here. From resistance, bearish engulfing. That engulfs, that the second candle engulfs totally the previous candle. That's what we call bearish engulfing. And then the price moves lower most of the times. Again, you see same pattern here. We have a question here. We're going to answer it shortly, Ricardo. Just give me 1 second. So this week, again, the price, you see, guys, is trading sideways. It just goes, it's just trading within these areas. Now, if the price comes somewhere here, sorry, that wasn't a support. That was an old support, and I just didn't erase it from the chart. So the support is up. The support, it's this one here. And now the new resistance is this one there. Okay, the resistance we had here and this kind of area we marked here, it was for the previous week. So we have new information right now. Okay. Someone says for the gold, yes, we're going to look at the gold. Aniso said, I'm very excited to attend this live. Good profit. It's coming in the next week. Yes, fingers crossed. Rumenda said, my name is Rumenda Passi. Nice to meet you here. Hello from Guatemala. Derby, thank you for joining us. Swayan said, sir, I'm really, you can address me as Theo, not sir, that's fine. I'm learning from you since last 3 months and my 2-week account growth 358%. Whoa, what? Honestly, I don't know who you are, and I believe that's a decent comment. I mean, can I take a screenshot of that? Oh, I love it. Awesome. Oh my God, when you guys use the information we put here and you find success, it's fantastic. I love it. And yeah, Ricardo said, I'm sorry, but you told me last week that support and resistance is about the weeks, but on the pound, I don't see why you select there the support and why just 1 week is enough to make a support resistance. Okay. This one, it's a whole subject about support and resistance, and I need to go in a deep explanation so you understand why I put one line here about support and resistance. I take them from the weekly chart. Okay, that's why. I can't the chart, sorry, don't understand. So I'll continue from this point, guys, and the USD Swiss. So last week, our support, it was here. Okay, this week, this support is not valid anymore. The support goes down here. The resistance was up there. Now the resistance, it's going to move down here. Okay. So what we had last week, the price made these lower highs and lower lows. And on Friday, the price broke above this downward trend line that means that this downtrend now came to the end. Guys, especially in the lower time frames that we are trading, we see during the day or during the week different trend reversals. And because I interact with traders on a daily basis, and I understood that many of you guys, you find it hard to understand when there is a trend reversal out there. Okay, so let's give once and for all some explanations about trend reversal. A trend, regardless of the time frame you are watching, would you guys want to really know once and for all about how to understand if the trend you are trading came to the very end, and if a new trend is about to develop? Would you guys, are you okay for if I just take 3-4 minutes to explain you about the trend and trend reversals? Is that okay with you? Are you interested to know? Yes, 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 yes. Okay, everybody is interested now, or at least most of you. So a trend, let's take this example here, a downtrend, and that you flip it, you convert it, and it's the same application for the uptrend, in just reverse the roles. A downtrend and any trend, it requires 4 points to be developed. It requires a high, a low, that's a high, 1, that's a low. It requires a lower low, that's the 3. And we trace back the lower low and we find the lower high, which is the 0.4. So we need 4 points to define a valid downtrend, and the same with the uptrend. After we have these 4 confirmations, then and only then we can draw the trend line. So we have a trend that is valid, downtrend. What we expected to happen is the price at some point to move upwards, like here, and to find rejection at this downward trend line, a reversal price action here, and to take trades short. It means to sell the price action from this trend line. In this case, this didn't happen. So immediately we cancel this trend line. But what is the implication behind that? That tells us that this downtrend, now it's over. It doesn't, it's not a downtrend anymore, at least from this point here. This downtrend ended. Okay, so the question you have to ask yourself is, okay, this downtrend now it's over. Does it mean that the market now it's in an uptrend? Guys, pay attention to this. I repeat that, and please add some comments. The downtrend, it's over because the price broke and closed decisively above the downward trend line without any reversal price action. So does it mean that the same time this downtrend is over, a new uptrend is developing? Can you please answer this question? What do you think? What do you think? There is no right and wrong answer. I just want you to also engage a little bit with these webinars as well. What do you think? Come on, there is no right and wrong answer. The end of the downtrend doesn't necessarily mean that there is a beginning of an uptrend, and vice versa. Peter said, how do you know where to put the trend lines upon a resistance? Guys, this is, I need to teach you about that, of course, how to put it, to put the trend lines, support, resistance. Ricardo said, I think it's just valid when makes a higher high. Okay. Jack, wait for confirmation. Yes. Bragg obstruction needed. No, by Ricardo. Aftab said no. Okay. Jack said engulfing bullish candles. Sorry, maybe simple question. That's okay, Peter. I have, guys, I have an idea. I don't know if you want or if you liked it, but because I had a conversation with someone that also participate on these webinars every Sunday, and I realized that if you are just a beginner and you want to learn how to trade, I can put a kind of educational webinars, like if there are 2-3 people that they are interested in learning how to trade trend line, support, resistance, we start from the basic. I might need to create some kind of weekly webinars to, let's say, to go with 8 webinars or 10 webinars. It's going to involve just a little bit of charge on that one. Okay. But yeah, you can decide if that's appropriate for you, and it's going to be easier and to go fast track. Okay. Some people might be interested. There are people, they already know that they are interested. There are people, they said they are not interested, and that's totally fine. I mean, it's up to you guys. So better send. So can you find me? There are actually, I'm surprised there are a few people are interested here. Can you please send me a message either on Telegram? Mario Sendiaferome, nice. It means I'm interested. So can you please either send me on the Telegram? You can find me as, I think it's Theo Theodoro. Yeah, that's how I'm on the Telegram. Or you can send at George at support here at Elevating Forex. Okay. Or you can find me directly on Telegram. Here is that's my name. And yeah, I can put a package together. It's going to be really, it's not going to be like the one-on-one coaching that I have there, which they start from 100 euros per session. And that's how I have it on my website. I will make something extremely affordable for this purpose, because it's going to be in a format that it's going to help you to start. Now, after, it's going to be much easier. Yes, hi, do you have a free webinar like this one now, guys? Okay. So, and the reason I want to start you with if you are interested to learn how to trade the basic, is until I finish my course, which you can also have access, so you can get some kind of help, so you speed up your result. So enough with that, let's move on. The answer is the break of a downward trend line. It cancels the downtrend, but at the same time, the market can either enter into a consolidation, or it's going to go with higher highs, or it's going to turn down again. For this reason, we need to wait for a confirmation. If the price is going to make a higher high like this one here, then the answer is yes, we are in an uptrend. But until the price makes higher highs, we are not in an uptrend. And we are not in a downtrend. We are in a transition period. Okay. And that's when many traders, they get it very wrong, because they really don't understand the mechanics of the market move. But we will learn them. Don't worry about that. So let's check the Euro, Great British Pound. Guys, the opportunities, I believe, this week, they're going to be on the minor pairs rather than the major pairs. Okay, so just let's go through these pairs here and to spot the opportunities. I will go through them quite quickly, although we have a lot of time. Euro, Great British Pound. Okay, by the way, guys, just to clarify something, absolutely no purpose on this webinar. We don't promote anything here, zero, okay? But if you ask me on these webinars to explain concept of support, of resistance, or price action, of stuff that they take a lot of time, and I cannot do it on these webinars, I have to give you the alternative option, because some of you later on, you're going to start making, let's say, you're going to experience great results if you know this kind of structure. But at the same time, I want you to know that here we don't promote anything. We don't associate nothing with something, okay? Everything, this is a free webinar for you guys. It's exclusively for Elevating Forex members, and I'm trying to teach you as much as possible, but also in the time frame that we have in our disposal, okay? And because we have traders here that they are advanced, they are intermediate, they are beginners, they just started, so I have to kind of keep an environment that is interested and relevant for everyone, okay? So we continue. Euro, Great British Pound. This is the weekly chart, and the price, it's in a downtrend. The market, it's in a downtrend. It came up to fill that that gap we already had from the previous from the previous weeks. As the market is in a downtrend, I'm looking to sell. So how do I look to sell? I go on a 4-hour chart, and I want to find a way to go short here. Price comes here, and it's in this 4-hour uptrend. Now, as the market is in a 4-hour uptrend, we need to go for a trend reversal. So if the price is going to move downward and it's going to break this low here around 0.84500, then we have the beginning of the downtrend. And because it's in a line with the weekly downtrend, it is very high probability trade setup. So we're going to apply price action reversals to go for short all the way. And the final target, or the first target, it can be this low here around 0.84. This is the plan for next week. It might gonna happen, it might not. Maybe the price will continue to move upwards, but we have a plan that if we're gonna see some kind of congestion here and a drop of the price, especially with the parliamentary elections in the UK, then it's going to make it a good opportunity to trade. US Euro Swissy also. Last week we commented on that we are looking to buy this one because of the reversal price action. Okay, so on the 4-hour chart, there were few opportunities here on Tuesday and Wednesday, and that was all. The price broke above the resistance. We had here the resistance, so the price broke above, and that resistance became a support. So the price stayed above the support, find some reversal price action like these bullish hammers or this bullish piercing patterns, and it just moved upwards. Okay, so this week we might gonna move a little bit higher, but again, it's not a high probability trade. Next one, gold. It absolutely went nowhere last week among with the rest of the majors. We were expecting the gold to move lower. We said that the support is down here. We don't sell and wait for the price to reach all the way there, but just until the most relevant support we see on the higher time frame. Anyhow, the market, it just came here, found the support, bounced off, and closed with this bullish price action on the weekly chart. So this can be a leading price action for next week. There is a resistance up here. That's a weekly resistance. There is another resistance up here. So we go down to the 4-hour time frame, and if the price will close above this resistance, then we're going to wait for some price action to go long. It means to buy, and we can target the next resistance. So this is the plan. Some traders, they might see this as a downtrend, but the higher time frame, it has a different opinion. It shows that this is in the context of an uptrend. Now, how do we choose a trading plan? It's also something I will cover with those they're gonna do the trading education training, let's say. But in a nutshell, on these webinars, I use the weekly chart as the leading chart. I look for direction and price action if possible on the weekly chart, and on the 4-hour time frame, I weigh the alignment of the trend, and I take the price action setups with the direction of the weekly chart. That's the easiest, the most simple trading plan and strategy to start trading. Okay, if you are looking for something solid, this is the one. So we're going to look primarily for bullish setups on the gold next week. Next one. Peter asked, should one never use the 5-minute time frame or 1-minute time frame? Absolutely, you can use them. And if you have the time and you know which times to use the 5-minute and 1-minute, they are brilliant. So you do your analysis on a time frame, maybe like 1-hour chart or 30-minute chart. If you're going to trade the 1-minute chart, you don't need to look at the weekly, daily, 4 hours, because they are very irrelevant. You can look, let's say, the hourly time frame, or okay, you can look the 4-hour if you want, but that's it. And of course, you can trade the 5-minute, 1-minute. I trade them as well. Nothing wrong with that, as long as you understand how to trade them and what to look for. Like on the 4-hour chart, on the Australian dollar, US dollar, I took a trade that it was from resistance within a range environment. I will never do that on the 1-minute chart, neither on the 5-minute chart. Okay, now I told you a secret that it's going to save you a lifetime in trading. Guys, if you're going to trade 1-minute or 5-minute chart, just plot some moving averages and go only for trends, nothing else. Don't try to be the hero of the market. It's going to cost you a fortune. Okay, try to be disciplined and stick with the trends, because during the day, you're going to see a lot of trends on these lower time frames. And trust me, they are more than enough just to trade them as a standalone. Next one, the Euro Canadian dollar weekly time frame. The price is at support. This one, it might going to be a good opportunity for next week because the price is at support with a reversal price action. So we have the two confirmations on the weekly chart. We can go down to the 4-hour time frame. What is happening here? Price makes this kind of market structure. We have as relevant this low, this lower low, this high, this lower high. So the price has to move above this high here around 1.47, and we will be in the beginning of the uptrend, and we're going to trade this upward move all the way until here. So that's the plan. Euro Canadian dollar on my watch list. Euro New Zealand, I'm going to look primarily for short opportunities because the market on the weekly chart is moving with these lower lows here at support, but there is also the resistance now. The moving averages on the weekly chart, they just turned bearish. So on the 4-hour chart, the market makes these higher highs. This is an uptrend. So if the price breaks and closes below this uptrend, I'm going to look for short opportunities. Swayam asked for the US oil, definitely. Euro Australian dollar. Guys, last week we said about the Euro Australian dollar. The market made lower highs and lower lows, and we marked the 50 and 61.8% of the Fibonacci retracement. The price, I think it was on Tuesday, no, on Monday. On Monday, the price moved upwards. It rejected that inside resistance that we marked and the 50% Fibonacci, and it moved downwards, making a false breakout of this low. It went back upwards again, bearish engulfing on Friday, and there we are. Okay, now the market on the 4-hour time frame is ranging. We have two equal highs and we have a kind of equal lows, but again, we consider this as a range. And am I buying here? I don't really want to buy there, to be honest. Why? Because the Australian dollar was a strong currency last week. I expect that this is in a downtrend. The weekly chart is down, lower highs and lower lows. So let's go on the 4-hour chart and try to capitalize. I believe that this one is one of the best currency pairs to keep an eye for the next weeks. Next one, the Great British Pound, Canadian dollar. I already put you the markup here. So the price found support here, and we have on the 4-hour chart the RSI printed bullish divergences, and we expected the market to move upwards and go all the way here. Okay, so that's another on our plan. Next one, Australian dollar, New Zealand. Weekly chart, of course, the price is a strong bullish candle. The next resistance areas is up here. So on the 4-hour chart, the price makes higher highs and higher lows. We have these 4 points here. Therefore, we define this as an upward trend line. From this swing at point A to this swing at point B, we draw the Fibonacci retracement because we have a trend. The 61 point percent, it's right here. And guess what? It aligns perfectly with the previous swing high, the broken swing high. So this is a serious level of support, and it has a nice confluence. So I will wait for the price, if it's going to come into this deep retracement, to find some reversal price action here and go long from there. That's my plan. Again, very promising Australian dollar, New Zealand. Next one, New Zealand, Canadian dollar. The trend here, it's uptrend, it turned. We don't have a reversal price action on the weekly chart, so we have only the trend on the weekly chart, but we are missing the reversal price action. So on the 4-hour chart, in order to go long, first we want to see the price to move above these highs here, to come back, retrace somewhere there, and then we are good to pick up the trade and go long. But if the price will keep falling, then we are not interested in this one here. Okay. AUDCHF on the weekly chart, the bullish candle, the bullish moving averages, the bullish trend, higher highs, higher lows. It's a good one for long opportunities. So if we're going to go long, we're going to, and the 4-hour chart, it also aligns with the weekly chart. So again, if the price will come somewhere here at this trend line or at the support, we want to buy and go long on this one and trade this cyclicity, this cycle, the trends. New Zealand CHF. We were expecting, actually, that was one of the most promising currency pairs last week because of this reversal price action here on the weekly chart. and this broken resistance finally that ended up as support. But last week it didn't go anywhere. It just traded 30 pips on average. Okay, so not very sure about this one. And last one, let's check the not the last one. Last one is going to be the US oil, but now the Bitcoin. It experienced some sell-off, to be honest. We are still in a downtrend because the price makes lower highs and lower lows. This is the major swing high and swing low. This is a not swing highs and swing lows based on this one here. So some people, they call it internal market structure. I mean, they don't exist in technical analysis, but if that helps some people to understand something, that you can call it any way you prefer. The point is to have a plan to trade it. You can call everything the way you want, just have a solid plan how to trade something. Okay, so this resistance, it's valid. If the price is going to come here, find some resistance, we want to see the price to move lower. Okay, on this one here, I plot also the 50 and the 200 period moving averages, because I will send few analysis on prop firms and on some individual traders next week. So this is the setups. The support is here. You can copy and paste the number 60,000, and the other one is 58,500. The resistance is this one, 62 something, 335, 64,500. We have a bearish engulfing order block here, okay, and the 50 period moving average that can act as resistance at this point. And the last one for today, the US oil. So we have a consolidation here, a breakout. The price came back to this area. So on the weekly chart, the price makes higher highs and higher lows, but it failed to close higher. Now, again, technically we are in an uptrend because we don't have lower highs and lower lows, but this is in the middle of no man's land. We don't have any strong reference of something to do right now, let's say, with the market open. First, we're going to wait for the price to, let's say, find some support here, or if it's going to just move lower and penetrate and surpasses all these support levels, definitely we're going to look for short opportunities. But as long as price remains above this S2 weekly support, we are still going for long. Now, the 4-hour bearish engulfing order block that I identify and I put it here, it serves the purpose of that confluence on the resistance. Okay, it will have a better meaning if it was at support, because we are in an uptrend. But again, we analyze what we see, not what we want, and not what we think in the market. And same with trading. Okay, I think we cover everything on this webinar too. I hope you guys enjoy it. And as I said, please, if you are interested, just send me a message on Telegram, or if you cannot find me on Telegram, send at Giles@support here at Elevating Forex, and I will be in touch with you. So guys, myself and the Elevating Forex team would like to say a big thank you to everyone for participating. We hope and we believe that we add a lot of value in your trading and in your learning. So our traders, they will become active tomorrow with the signals, and markets will get crazy this week. So we're going to experience some good volatility. Again, have a great night, everyone, and I will see you all again on next Sunday. Thank you very much. Bye-bye.